So brokers have always tried to broaden and diversify their offering. But these days, with the suffocating regulation on one hand and the emerging crypto space on the other, a multi-asset strategy is a must. So to address all this, we have here Victor Golovchenko, Senior Editor at Finance Magnets, who's going to lead this discussion. Please, Victor.
Thank you, Michael. Since we're already pretty full on this panel, I'll just let first our esteemed participants introduce themselves.
Yep, so my name is Stephen Dorian. I'm the Director of Market Data for Cboe Europe, which is part of the Cboe Global Markets Group. Cboe Global Markets operates a number of exchanges globally. So we operate the largest options exchange in the world, the Chicago Board Options Exchange. We also have the CFE Futures Exchange. We're one of the largest US cash equity exchanges. We also operate the largest equity exchange in Europe, called Cboe Europe, formerly known as BATS Europe. And we also have Cboe FX, which is one of the largest FX ECNs in the world. It was formerly Hotspot and has recently been rebranded as Cboe FX.
My name is Andrew Ralich. I'm the co-founder and CEO of 10 Financial Systems. 10 is a technology provider providing liquidity access, aggregation, reporting, and connectivity solutions to a broad base of global OTC market participants.
So good morning, my name is Alexis Kouvas. I represent GFD as a sales director for the group, but also a member of the board for the GFD Bank, AG in Germany. So GFD is a broker founded in 2011. We are a multi-asset broker. We provide solutions not only for retail clients, but also for more institutional clients. We are developing the banking also side of the group. Our focus is mainly Europe. We have been developing the clientele in Germany for the last years. Yeah, I'm very happy to be here.
My name is Ege Kozan. I represent FX Cubic. I'm the CEO and one of the co-founders as well. We provide technology for retail and institutional brokers, specializing in liquidity bridging, aggregation, automated risk management, and reporting as well.
Hi, my name is Jérôme Favres. I'm the Managing Director of Trading Central Labs, which is a deep tech arm of Trading Central. Trading Central Group, as you may know, is well known for its insights, a leader in the technical analysis space, but also in other verticals like fundamentals, macroeconomics, market sentiments, and risk. We have 300 clients all over the world, and we represent roughly between 100 million and 150 million of end users.
My name is Ajib Mohamed. I'm leading the institutional business at Swissquote Bank. It's a Swiss bank listed in the Swiss Stock Exchange. We do offer banking services to all our clients, institutional clients and retail clients. We have a multi-asset platform. We are listed in the Swiss Stock Exchange. And we're here to debate about multi-asset products.
Okay, great. So we got here because there's been some changes in the industry over the past several months, and brokers are now looking for alternative ways to attract new clients, to create more volumes. So how big of an impact did the regulations have on the business, and what measures do you see brokers taking to mitigate those changes?
Sure. So, I mean, the regulations didn't affect us directly because we're a stock exchange. So, we're not offering CFDs. We're offering shares or futures or options. But from our client base, who very often would license our data to create, say, single stock CFDs, we're certainly seeing a trend towards maybe less leveraged products, more looking to do DMA, direct market access, to the exchanges, and starting to charge commission rather than deriving a price or widening the spread. So I think that's one trend. The other trend I'm starting to see is a trend towards commission-free trading. And again, this isn't necessarily on the CFD space, but on the actual purchasing of stocks via a retail broker or a prime broker, and also doing like fractional share ownership as well.
Andrew, do you see the same DMA trends materializing with your clients?
Yeah, absolutely. And I don't think the trend started a couple months ago, nor do I think the regulatory trend that we've been seeing in 10 years operating in this industry has just suddenly reached a precipice. We've seen it as a curve and an acceleration over time. Our business was founded in the US in 2009, right after a major, or right during a major regulatory overhaul in this industry. And what we did is built and prepared our business for the transparency type of regulations that we expected to come sweeping kind of around the world over the future. And these things happen maybe a little bit slower than you anticipate or think in your mind. On the multi-asset side, I think the regulation from a competitive standpoint or marketing standpoint hasn't created any new demand for brokers to introduce multi-asset, but what we see that it's done is traditionally operating an FX or crypto-only broker was quite easy. It was under-regulated, had very little capital requirements, and had limited restrictions. So jumping through all the hoops that I'm sure we'll discuss today that a broker needs to go through to offer equities, futures, a direct multi-asset product was a pretty heavy lift. And what the regulations have done, amongst many other things in cleaning up the industry, is put many of those hoops in place for brokers that operate FX only and kind of justify jumping through maybe a few more to make their offering more broad and more applicable to a broader base of clients.
So, Alexis, you guys have recently also launched zero commission stock trading, and can you elaborate on why did you make this decision?
So first of all, I would totally agree with you on the regulatory aspect. I mean, this didn't start yesterday. I mean, this has started in 2008. We totally abide by the ESMA regulation. I mean, we feel this is the right thing to do. We don't believe in the, over leverage. We have been anyway a different FX broker from the beginning. We were initially, naturally actually, an FX multi-asset broker, but by nature. The only thing is we didn't have the capacity. So the zero commission aspect, on the stocks, it's just because we can do it now. I think it's more a coincidence. So when we speak about multi-asset as well offering, I think the restriction we had as well is more on the platform side, where actually initially we also we offered the first MT4 platform with 9 assets, different assets. We're also we are the first one to launch the post-trading transparency. Sorry. So I think what we experience now is more, I think it's a bit naive to say that, as the regulation just happened now. I think we have to adapt ourselves, and the stock offering we are doing is just is helping us. To strengthen our offering, but it's just a coincidence. I think this is happening now because this is part of a long-term plan. We have acquired the bank last year. We have developed this business, and actually we have come much stronger from ESMA. We have experienced higher volumes in 2018, and even on the first quarter, which is a bit, the staff quarter, as everybody knows, due to volatility.
Now, I was asking you if the integration of different assets is more complex as to straightforward FX and CFDs by now?
Yeah, for sure. Obviously, we are the ones who has to integrate to these new platforms and exchanges for the brokers themselves. So usually, for example, especially crypto exchanges and stuff like that, we have integrated to. They don't provide the standard fixed API, things like that other guys offer. So we have to go really in depth to integrating, testing, because it's really, really different. But that's the work that we have to go through so that the broker doesn't. So that's one of the actually advantages of outsourcing the technology to a company like ours, or like Andrew's, so that these guys can focus on actually the clients themselves and what they want, and then leave the technical side to us, and that's what we do.
So, Andrew, what are the challenges associating with integrating an offering like zero stock commission trading, for example, or DMA access to futures markets?
So there's two primary challenges. The first one, as Ege pointed out, is there's a very robust and established infrastructure for receiving, streaming, and aggregating market data for exchanges around the world. There's plenty of good companies servicing that market, the likes of an Active, a Morningstar, Thomson Reuters, Bloomberg. So it's not necessarily about reinventing the wheel there as much as adapting what we've known from the FX world into that new kind of, not new technology, but new technology to us. The other side of it has nothing to do with technology. It has to do with explaining to a base of 250 brokers who have never paid for market data before or never gone through the process of integrating with a clearing provider with a full compliance and diligence mandate as the result of being a highly regulated exchange entity. So we started really our focused journey into multi-asset about 3 years ago, and a lot of the process has been technological based, but a lot of it has been educational to ourselves and brokers, and finding where there's bridges and gaps between how we've operated before, what exchanges are being progressive about their approach and understanding of this space, and where we need to kind of push back on the institutional side of the industry as well to, you know, explain some of the education and knowledge gaps that exist in this space and bring the two together.
So you said the magic words, market data, and I cannot not go back to Stephen to letting explain to brokers, perhaps in the audience, like what do they have to what do they have to pay, and why do they have to pay for it?
Sure. So I mean, it obviously depends on the extent of the use. What you're essentially paying for is the licensing rights to use the data that we produce as a regulated investment exchange. And this is the same across all exchanges globally, of which there's over 300. So most of the kind of customers who would be in Cyprus for us, you know, they basically take a license with us, and they are then given the rights to create contracts for difference, spread bets, and then distribute that price in real time to their clients. Now, there's different exchanges that have different regulations. I think the knowledge gap is certainly one thing that we are seeing, and you know, so having software providers like 10, who has integrated directly to our matching engines in both New York and London, they have been a great help in bridging that knowledge gap and actually educating their clients. And as you know, Andrew mentioned, you know, you can get data a number of ways. You can go direct, you can go via a software provider, you can go through an extranet, or those kind of traditional data vendors who have done the hard work and consolidated all the exchanges globally.
Okay, so Jerome, your product reaches end clients, so you have more data on the interest of these clients into trading something different than the majority of our well-known products like Forex and CFDs on indices. Where do you see those data trends leading us?
It's quite interesting because as a provider of content to most of the online brokers in the world, we saw a real shift in terms of content to bringing differentiated content so that brokers can onboard or retain their clients, and also that creates more engagement, obviously. And at the same time, there's clearly a problematic around information. There's definitely too much information, and broker thinks most of the time that the more they give to their users, the more informed they will be. But usually, what we see from the end clients is they are overwhelmed by information, and they complain about it. But they don't necessarily complain about knowledge. So the whole idea we aim to do as a big brother of partner of brokers is to really help them in this space in created products that had really value here, whether you are focusing on Forex or any other asset classes. And the development of technology like artificial intelligence, machine learning, natural language processing allows us to recreate some really strong and differentiated products that makes the offering really valuable for anybody. And it's absolutely true, and that's something we see from the big brokers in the US who ask us for this sort of things, and especially in the space of news analytics and market sentiments, which is really the new trend on the retail space, and the end users are quite ready for this kind of innovation. To having simple multi-layers reading type of content, whether you want to talk to your users who are really basic end users or more advanced ones. So that's really the trend we are seeing in content, and that fits quite well in this zero commission space, where for zero commissions you want to offer really basic content and then really advanced ones for the really active traders.
Okay, so Mohammed, you have a perspective on both sides on the market. From the obviously you're specialized in institutional, but Swissquote also has an amazing retail client base. And where do you see trends in both spaces? Do you see more demand away from traditional products?
We saw at Swissquote that there is a big difference between retail and institutional clients. Since volatility came down on the in the FX industry, they swapped to the equity side. At Swissquote, being a bank, we do offer traditional asset classes and FX products. So they swap naturally to stocks and to leverage products such as options and future, definitely. FX industry, institutional side, they're still keeping the FX, they're still active in FX despite the low volatility. There is still trading firms, still big corporates, commodity trading, they still have to hedge the exposure. So they're still very active in the FX and also in the future side, definitely.
So this brings me to a point that apparently the industry is shifting into a new direction, and JFD being one of the brokers that has been multi-asset since the beginning, how do you see this evolving going forward? Where do you see the role of your zero commissions stock trading product, for example?
So I think, yeah, it's a real addition, but we have developed, like 2 years ago, the asset management side of the business. So there is a sophistication of the clientele that we see. I think this is linked to the regulation as well, so it goes together. Our focus is mainly Europe, so our clientele is a bit more sophisticated, maybe as well. But the zero commission is a trend for us to develop other options. We see actually the offering as a 360 degrees offering, so that we can give the possibility for the client to access any kind of product. So this is really the purpose. Of course, there is a fintech element that we would like to see in the future. We'd like to launch an application on our side in Q3. So that this is linked to a very long-term strategy, I would say.
If I can add to that, I think it's an important point that multi-asset is not a replacement for your FX business, and FX will still be the highest margin part of your business moving forward. But complementing FX with other asset classes is also going to be a necessity. We're very strong believers in this trend in the long term. We don't believe the retail client 5 or 10 years down the road has any interest in a boutique firm offering only FX or frankly only stocks or only crypto. An interesting part of the crypto trend over the last, the wave or the curve or to the moon or wherever it's actually going, is that crypto came and said, it's replacing everything. It's replacing fiat. It's replacing the traditional broker. And we've now seen crypto merge into this same conversation. It is a component of a holistic multi-asset offering that a retail client will demand moving forward. Not that he'll move all of his volume from euro-dollar to Apple shares or a crude oil future, but that optionality is going to be essential to the end trader, and thus complementing your existing offering and not necessarily replacing it is how we think about it and how we position it to clients.
So the next question is to the whole panel. How can brokers reinvent their revenue-generating model today?
In our side, as Andrew said, the most important is not to be focused only on one asset class. And we must see the offer in the global view, and we must see each product very complementary one with each other. So you can go to the FX, edge your exposure with a future or an option. So we must go to the multi-asset strategy to provide a global offer to our clients. And this is the aim, I think, in the next future, is that every broker see the market in the global view and can offer all asset classes to their clients to be able to manage a real strategy with only one counterparty.
Just to add to that, at the end of the day, what the traders want is volatility, right? So it's about being ready at the time, whichever asset is being trending at the moment, you have to be ready at your brokerage so make sure that you're offering those assets and then you're not late. What I see a lot is something's trending and a lot of brokers are trying to integrate to that and start offering it, but then by the time they get to that point, then something else is trending. So it's all about being ready for that in the first place.
I think that's a great point, and we are either burnt or spoiled in how we've existed in this industry in the past, in that we've had to have a lot of agility. We've pivoted from a regulatory standpoint. We've reacted to changes in platform offerings, client demands, and interestingly enough, I think we're seeing trends that are actually pushing some of that agility into a much more rigid world of exchanges and traditional multi-asset exchange-traded product offerings. You know, in the likes of a CBOE, a CME, are seeing things like Robinhood, seeing our reaction to them. I think we've concluded very well on this panel that brokers should be thinking about multi-asset, but the steps you actually have to take are long and very hard, and some of them difficult because of the rigidity of the traditional infrastructure and offerings from exchanges and others. So, you know, giving props to CBOE, I think they have one of the most progressive market data offerings that takes into account a wide base of smaller deposit clients. Exchanges like CME are still coming around on that, but we see them doing things like launching a micro product recently. Those are nods to the fact that they recognize that this industry is coming and they're adapting slowly but surely to these kind of demands.
Yeah, I mean, I just want to add on this. I mean, this is what I was mentioning at the beginning. The platform for broker specifically has been a bit, I mean, on MetaTrader. I mean, there are evolutions now. So I think the platforms are really evolving to make sure that everybody can have access to them. So although I think we have, I mean, from GFD, we have more like a natural multi-asset thinking. It doesn't mean we could do it. So, as you mentioned, it's clearly now the way forward, and things are maybe moving in this direction. But not to be a multi-asset broker today I think it's very tough. I mean, I think it's not possible.
Yeah, I would echo to what you said. We don't at Trading Central have the same problem as you guys on deploying, but we aim to follow this trend, and we know that it's very complex to deploy many asset classes, many products at the same time. So even for the content, it has to follow the same trends, and being able to deploy quickly in an agile way content and with a pricing that should also follow these elements, and that's where we aim to be this partner in terms of content to be able to deploy things quickly, whether it's API, iframe, so that you can upscale or downscale depending on your place. So it's similar to asset classes offering. It's the same for content, definitely.
So, having in mind data charges, are brokers still able to make enough margin on these products?
Well, the brokers don't really share their margins with me, but there's expensive solutions out there and there's cost-effective solutions. You know, obviously the costs will ramp up the more asset classes you're adding. If you're licensing from multiple exchanges, those fees do add up. I think CBOE, particularly on the European side as well as the US equity side, we have a bit of a sweet spot with the FX brokers in that we are pan-European. So from a single feed, single license, you can get access to 6,500 blue chip stocks across Europe, across 15 countries. We've got around 30% market share in Europe, so that obviously can reduce the cost, simplifies it for the broker, because they don't have to go to maybe 8 or 9 different exchange groups around Europe and pay much more fees that then would accumulate to probably in the hundreds of thousands a year. And I think as well, you are starting to see some exchanges that are evolving their data policies. As Andrew mentioned, it's this traditional model that doesn't necessarily work when you start talking about this particular industry. So you are seeing firms now evolving their policies to include things like derived data APIs, where outside of a controlled white label platform, a firm wants to distribute the derived prices or the DMA prices directly down to these brokers who, again, they've never had knowledge of what the licensing requirements are. So some of the exchanges are evolving to maybe put the onus on the broker and then they can, or the prime broker, and then they can pay on behalf of each of their other brokers. And that again just simplifies the chain. You have people like 1-0 integrated and licensed. And then again, there's less people in that chain, less licenses, and then ultimately less cost.
If you allow me one comment, the challenge for the brokers is they used to get the data today for free. You can trade FX, it's free. To get access to exchanges, to be DMA to the exchanges, it's very expensive. So you must have a high number of clients, to be able to be profitable. So this is where bridges like FX Cubic and 1-0 can be a good point, a good intermediary to reduce the cost if they manage to get good deals with exchanges, of course.
So, Mohammed, I'm going to ask you about another way for brokers to diversify, and this is asset management. Have you looked into that with Swissquote, and what are your findings?
So, Swissquote setup is quite particular. Even if we're a bank, we don't do any wealth management or any advisory to our clients. So we are a Swiss bank offering brokerage services to retail and institutional clients. The only exception we have, it's a robo-advisory where we propose, based on machine learning and artificial intelligence, wealth management to our retail customers and also institutional customers. So it's a white label platform where a robo is making this strategy on your own, based on the old setup you made upfront. So Jérôme is quite familiar with such product. There is many players, especially in the US. We are developing this product since 2008 now, because our founders are engineers before being bankers. So that's why we entered into this market about 10 years ago, and we're already proud about our product, but still it's quite a challenging area, definitely.
So how challenging has it been for JFD to maintain its wealth management division? And do you have any advice for brokers that are just getting into this space?
Okay, it's not wealth management as such. I mean, it's asset management.
Okay, yeah.
We don't do advisory yet, at least. Actually, it's going well, I have to say, because we are expanding this. GFD Invest, which is our platform for investment and asset management. We are extending now the cash equities, So we're expanding a range of products, and actually, due to the sophistication of the clientele and certainly the regulatory, let's say, restrictions, we see also a trend for clients to move to this kind of product. So I think it's part of the, let's say, wider offering we can do. So definitely there is a wealth management side angle, but I would say that with the bank as well, we can focus more on institutional clients because we have also institutional trading desk. We are dealing directly with family offices, so we can do this kind of wealth management side, both combined. Yeah.
So, Andrew, I'm going to ask you. We have seen companies like Robinhood and Revolut and TransferWise revolutionize the brokerage and banking space. Do you see our OTC audience being squeezed by a new player that could come up with something, with the unicorn of multi-asset trading?
You know, I think we see that as a very positive trend, and I'm going to put Robinhood also alongside crypto for a second, because looking at it from a high level, one thing that is undeniable about the crypto trend and Robinhood and others is that there are retail traders out there with money that they want to speculate with, that they want to put on deposit. And in the crypto world, they're willing to put it out pretty much anywhere. With Robinhood, they're tapping into a millennial client base that there's absolutely no doubt that there's capital out there and there's a desire to trade. So not moving to managed products, not an evolution into robo-trading. There are people out there who want to invest their money and self-directed, speculatively trade. And so those trends encapsulated in that mindset should lead us to say, well, why weren't they trading at the brokers that have existed for decades here in our industry today? And what can we do to adapt and attract them? What about the crypto market or this specific platform or a zero commission offering? You know, they're making money, and there are ways that these firms have adapted a whole industry around attracting a client base that wants to trade from mobile, they want a streamlined onboarding experience, and they want access to more than just one range of instruments. So we see it as a learning process. We see it as something that we should be equipping our brokers with the right tools to go after those same clients, because at the end of the day, that's the business that we're all in.
All right, and what are the right tools?
I think, you know, humbly speaking, we have learned a tremendous amount about multi-asset. You know, I didn't come from an exchange-traded background and then start an FX business. I grew up in this industry like many people who are here. And you know, for a long time, we, like MetaQuotes, like many of us in this room, thought a multi-asset platform was, oh, we just add depth of market to pretty much the same platform, and now it's multi-asset. It's not. There's market data attribution, entitlements, corporate actions. There's a laundry list of actual steps that you have to go through to match this trend. But again, I really believe it's a trend that is an inevitability. It's not binary options or crypto where you had to jump in and miss the wave, as we mentioned before. This is just the future. So what you need to do is start the process. Start the learning process soon. It's not going to snap your fingers and happen tomorrow. We're seeing the institutional side of the space, from the exchanges to you know, institutional providers in our world. We saw an invest in MetaQuotes PR this morning that they're looking to consolidate market data, execution, and access to these markets into a bundled product focused on this industry. And so if you're not looking at this and if you're not starting the learning process, you're going to be even further behind, because it's not something that you can shortcut.
We mentioned crypto a couple of times, and Swissquote has been one of the banks that went early into this space. What is your experience there? Do you see demand coming back to this product now that we have more volatility?
Yeah, definitely. The past 2 weeks, we've seen the volume increasing a lot in the crypto area, but still we've seen the crypto business in the Swiss way. So we don't do CFDs, you can't short it. So if you enter, you buy the crypto and it's considered as an asset class, you custody it at Swissquote Bank, you can leverage it, block it, ask for Lombard loan to trade other asset classes, but it's seen as a real asset class, it's fiat, you can transfer it out, in, no problem at all, but still no CFDs at all.
Any other thoughts on whether crypto is coming back?
Crypto is a very interesting asset class by itself, and from our perspective, it's to become really a strong asset class where easily traded. We have to find some insights there. We know that equities, forex are driven by macroeconomics, fundamentals. Cryptos is a very different animal, where we don't know what really drives it, the price going up or down, except its sentiment, its psychological view of the mass, and we have to create new insights on that very asset class so that people can really understand what are the drivers for the Bitcoin going up or down, because
so many people say, well, it's going up, but why? We don't know sure. It's kind of interesting thing, and that's where actually the technology and being able to quantify the psychological mood of the market as a new tool is really helpful for the cryptocurrency, because that would be the only tool that really understand what are the drivers there.
Any other thoughts on crypto? I cannot resist but ask Sibo, because you guys have had quite an experience with being the first ones to introduce futures and then subsequently.
Yeah, so we were the first ever exchange to launch a Bitcoin future, which traded out of our Chicago exchange, the CFE. Traded well, certainly, but we've recently decided to just look at the contract structure again. We think there's ways to improve it, so we've temporarily delisted it as we look at what our strategy in that space is going to be going forward.
So
But
it's temporary.
we'll see. It's
Okay.
a different team and much smarter minds than mine here looking at it. But it's not unusual for a contract to be evolved. Like even our volatility, our VIX contract, the methodology's changed since its first inception. So we're always looking for ways to be more efficient and improve the markets.
Okay. Andrew, do you have any thoughts?
Yeah, I don't think crypto went anywhere or has gone away or needs to come back. It's still there, and it's one asset class in the multi-asset conversation that should be supported, but again, it's not replacing the world. I think the crypto space in general has a lot of work to do to regain some confidence, not just that the price can go from 2000 to 18 and all of the kind of inherent volatility that's built into it, but looking at the exchange traded space, I don't remember a time where NASDAQ or Cboe called all their clients and were like, your Apple shares disappeared, we don't know where they are. And that continued trend is something that the crypto world is, from a high level, is going to need to stop if people are going to get confidence back in that market and treat that asset class seriously.
Okay, so we have a few minutes left. I'm going to ask our audience if you guys have any questions.
Hi, my name is Hormuz from Equity Capital. I have a question and a thought about the notion that the retail traders of the future are going to be multi-asset. They're going to know what they're going to trade. They want to have multi-asset solutions, and the tech providers will give them the multi-asset solution, and the brokers are going to give them multi-asset solutions. I'm not sure that's going to be the way it's going to go. It might be. Is it possible that it's the other way around, that they will become very good at what they want to trade, and they'll pick what they want to trade, but it puts pressure on the technology vendors to provide the multi-asset class solutions, but the clients will not want to go to the same brokers for every asset class, so they'll go choose their broker for every asset class separately. So that trend, it might be misleading to think that that's where the trend is. Everything's going to just become multi-asset class. What's your thoughts on that? I think it puts a lot of pressure on the tech providers here, the two of you, in terms of having to provide the best tech for everything.
It has a consolidating impact. I think as a broker, why don't you work with every liquidity provider here and send one instrument to each of them? And effective use of capital is something that affects brokers and retail traders. So those with the benefit of being able to deposit at 6 different brokers, maybe we'll do that, but I disagree. I think there is a lot of heavy lifting going on for us to integrate this into our solution. But I want 1.0 to be around for another 10 years, 20 years, and beyond. And so I fundamentally believe that that's the way the space is going. And again, I think the retail trader, we'll see where it goes in the future, but I think from a use of money and capital standpoint, they'll want to put their deposit at one place and get access to a range of markets.
Ege?
Yeah, the thing about putting your money with the same broker, that's the crucial part, right? So you don't want to put your money in all these different LPs, so why would the retail guy do exactly what Andrew said? I think that's the main issue there.
If brokers have to choose where to diversify their offering today, which asset class should they pick?
Well, I would say equities from my perspective, because I get licensing fees, but yeah.
I think that one important kind of takeaway, and again, we've concluded maybe not multi-asset is the future. It's definitely something to look at. Honing your focus on it is something that we've really learned and encouraged clients to do. It's exciting to get the PDF from an exchange that shows all 6,000 instruments that they offer on an equities basis. We're encouraging clients to take small steps into this world as they learn it. So let's share information. What are the top 20 traded US and European equities? That's a great way to start. You don't need to go from 60 to 100 FX symbols or CFDs into 40,000 symbols and all of the headaches and management that comes with it. So we're saying, find a provider, choose where you're going to get your market data. Likely you're going to source it different from where you clear the trades. Maybe you're working with a provider that does both. Work with them to understand, hey, what are the highest volume pairs for me to add in and try this out? Learn my process of managing these symbols, corporate actions, and then, onto it from there. But you'll be overwhelmed by the breadth of information and data available, I think, and honing that focus as you take a next step into this world, I think, is really important.
But just to add on this, I think I will invest more into the fan base that the broker has. The base is very important for a broker. So it's not only adding new products, it's also making sure that you keep, good relationship. And as you said as well, good relationship with technology providers. That's the key, I think.
Okay, Mohammed?
I think the most important is the typology of your clients. This is definitely the most important, because based on the typology of your clients, you want to go to one asset class or another. If you have speculative clients that want to leverage, you must go to the future side. If you want more conservative clients, okay, equities can be good options. The other question is, did the client who want to trade equities want to come to a broker or to a bank? If I'm retail clients and I want to trade equities, I would prefer going to a bank, having the possibility to leverage my assets, shorter call options, take the premium, do a lot of things. So at the end, it's a matter of having a full strategy and finding the right partner, so the broker or a bank, based on my own strategy and my own profile.
It's interesting what Mohammed was saying, almost corroborated a little bit with the earlier question of picking best of breed. If you're trading multiple asset classes, you may not want to do it all in a one-stop shop. But my question is related to that. It's maybe to get a little bit of an idea of what you guys are thinking about the different ways to implement a multi-asset class service offering, and whether there are any parallels or examples from the institutional space that would contribute to the different ways you can implement the multi-asset class service offering.
As somebody who does this quite often, I think, first of all, choosing a technology provider who's thinking about multi-asset or talking about it, if you're not having a dialogue with your technology provider today, or they're not putting these options in front of you, it's going to be very challenging. I think for the likes of us who have seen this wave coming and have prepared our tech for this for a long time, it's not been a major lift or transition for brokers to use the same equipment that they've managed risk and routed orders and brought in quotes for FX that they do for exchange. Some of the rigidity of that world actually makes it a little easier. If you want to run a DMA product, then you don't have to worry about your warehouse or B-book risk, because that doesn't really exist in that world. It doesn't exist at all in that world. So the real questions come down to liquidity providers. It's not the same necessarily group and selectivity and limitless liquidity and options that you had in FX, and that's a lot of the lead-up time that we see brokers going through as they add in multi-asset is finding a clearing relationship, determining if they can provide you the market data or you have to get it separately, and going through what is a longer onboarding process than traditionally going with an FX LP.
Okay, well, thank you very much, esteemed panelists and dear audience. Enjoy the rest of the show, and see you next time.